What's up YouTube? Welcome to my channel. My name is Hossein. So you're here to know about stock exchange, IPOs, and ticker symbols. What are they? Stick around and we'll get to this in a very short video. So ticker symbol is a 3, 4, or 5 letter symbol that easily identifies a company listed on the public stock exchange. Companies traded on New York Stock Exchange can have ticker symbols identified with up to 3 letters, such as MasterCard, which has a ticker symbol of MA. Companies listed on the NASDAQ stock exchange can have letters up to 4 letters. All ticker symbols are identified with capital letters. Think of them as a nickname. Some of them have names similar to the company, like IBM, which has a ticker symbol of IBM, or Harley-Davidson, which has a ticker symbol of HOG or HOG. So some have a name similar to their name, and some have clever ticker symbols, like the Harley-Davidson. And some others have ticker symbols with 3 letters, such as AT&T, which has ATT as their ticker symbol, and it's listed on New York Stock Exchange. Now, if you see a 5-letter symbol which ends with an X, you can know for sure that that is a mutual fund. Now, mutual funds are not traded on any stock exchange and are treated differently from stocks, which we'll get to in another video. IPO is when a company sells their stocks for the first time to the public. Now, companies use underwriters to determine the best price to sell their shares to the public. Now, why would companies go through setting up an IPO, becoming a publicly traded company? The funds that companies raise through or initial public offerings is the money that they never have to pay it back. So for instance, if a company doesn't want to go to a bank for a loan, they can list their companies on one of the exchanges and offer them to the public. This process goes through initial public offering. All the capital raised during the public offering, it will be for the company to keep, to invest, do whatever they want to do, and they don't have to pay it back. Now, one thing to keep in mind, once a company goes public, they are no longer owned by a small circle of investors. They are owned by the public, by the shareholder. So anyone can buy a share of that company and become a part owner. Now, in order for a company to go public on the IPO, they need to hire an underwriter, somebody who can analyze the company portfolio, the company's balance sheet, and everything basically, and figure out how much this company is worth and how much each share should be priced at. One of the major underwriters in the United States is JP Morgan Chase. Another one is Merrill Lynch Bank of America. So these underwriters, basically what they offer, besides figuring out what the price initial public offering should be per share, also they help the company in raising capital, and they do this by 2 ways. One way is setting a fixed price for each share, which is also known as fixed pricing, or they can call around to the biggest investors in the country and get them to invest in the new company, known as book building. Once the shares are on open market though, the price is set by market value or demand, market sentiment, which shows what the investors, the general public, feels about the company. Why companies go public, most importantly, is because they need to raise money without asking from the bank. All this happens on stock exchanges. So what are the stock exchanges? Stock exchanges are the platforms that buying and selling of shares are traded on, and the stock exchanges make money off of the transactions between buyers and sellers. They make commission. NYSE and NASDAQ operate within the United States geographical location, whereas London Stock Exchange operates within United Kingdom. Shares on stock exchanges have an ask price and bid price, and the difference between ask and the bid is usually a few pennies, which determines the commission that the stock exchange makes. Now, billions of transactions, shares are traded on the stock exchanges every day, and the difference between ask and the bid spread baked in them, which is that commission. So you can imagine on billions of transactions every day how much money the stock exchanges make. And this is how stock exchanges make their money. Hope you liked the video. Give it a thumbs up. Let me know in the comments what topics do you like me to discuss, and hit that subscribe button. See you next time.